Ladies and gentlemen, good day, and welcome to the earnings conference call of JK Lakshmi Cement Limited, quarter and 9 months ended 31st December 2025, hosted by PhillipCapital India Private Limited. As a reminder, all participant lines will remain in the listen-only mode, and there will be an opportunity for you to ask questions after the presentation concludes. Should you need assistance during the conference call, please signal the operator by pressing star then zero on your touchtone telephone. Please note that this conference is being recorded. I will now hand the conference over to Mr. Vaibhav Agarwal from PhillipCapital India Private Limited for opening remarks. Thank you, and over to you, Vaibhav.
Thank you, Ryan. Good evening, everyone. On behalf of PhillipCapital India Private Limited, we welcome you to the Q3 and 9 months FY2026 call of JK Lakshmi Cement Limited. On the call, we have with us Mr. Arun Kumar Shukla, President and Director, and Mr. Sudhir Bidkar, Executive Director, Corporate Affairs and CFO at JK Lakshmi Cement. I would like to mention on behalf of JK Lakshmi Cement Limited and its management that certain statements that may be made or discussed on this conference call may be forward-looking statements related to future developments, and such statements may be based on current management expectations. These statements are subject to a number of risks, uncertainties, and other important factors which may cause the actual developments and results to differ materially from the statements made. JK Lakshmi Cement Limited and the management of the company assumes no obligation to publicly update or alter these forward-looking statements, whether as a result of new information or future events or otherwise. Also, JK Lakshmi Cement Limited has uploaded a copy of the Q3 FY26 results presentation on the company website, which participants can download. We now hand over the call to the management of JK Lakshmi Cement for their opening remarks, which will be followed by interactive Q&A. Thank you, and over to you, Arun, sir.
Vaibhav, thank you so much. Good afternoon to all of you, and welcome to this call of JK Lakshmi Cement quarter 3 and 9 months of financial year 2025-26. We have already uploaded the presentations, and we can right away start with questions and answers.
Thank you. Ladies and gentlemen, we will now begin with the question and answer session. Anyone who wishes to ask a question may press star and one on their touchtone telephone. If you wish to remove yourself from the question queue, you may press star and two. Participants are requested to use their handsets while asking a question. Ladies and gentlemen, we will wait for a moment while the question queue assembles. We take the first question from the line of Patanjali Srinivasan from Sundaram Mutual Fund. Please go ahead.
Thank you for the opportunity. I have a couple of questions. So firstly...
Patanjali, I'm sorry to interrupt you there, but your audio is not coming through clearly. Could you please use your handset?
Yeah, I hope it's better now. Can you hear me?
This call will be recorded.
Hello?
This call is no longer being recorded.
Hello?
Please go ahead.
Yeah, so I believe our share of trade sales has fallen quite a bit on a year-on-year basis. Could you explain a bit about this in terms of why this has happened?
I think not very clear, sorry. I'm extremely sorry, but I couldn't really hear that.
Am I audible now? Can you hear me?
Now it's little better, not so great, but yeah, we can manage.
Okay, so your trade sales in your overall volume has declined quite a bit a year-on-year basis. So can you tell us what has happened here?
Volume? Not clear. Sorry, sir. Sorry.
Mr. Srinivasan, if you could please use your handset and ask a question.
Yeah, just a second. Your trade share has fallen quite a bit on a quarter-on-quarter basis in your overall volume, trade cement sales. So can you explain why this has happened?
Yeah, good. Now it's clear. So you're asking about trade sales drop, right? Yeah, so that has happened in quarter 3 of this year. And this is precisely because of two things. One, of course, I think our volume in Gujarat has gone up. Whatever we sell in Gujarat, in quarter 3, we have sold more than that. This is one. Second, that is also coming from the fact that we commissioned our Surat grinding station in the month of September, 22nd September 2025. So that volume was also available with us, and there was a good demand in Gujarat beyond 15th November. So our volume went up in Gujarat, which is predominantly a non-trade market, and that is why our trade share has gone down by about 4%, right?
Yes.
53 to 59%. 49, sorry. So this is what the reason is.
And why would our trade volumes on a year-on-year basis decline? I get the fact that your non-trade has gone up because you got more business, but why is there a degrowth in volume for trade year-on-year?
So trade also, if you really see, post GST reduction on 22nd September, there was some confusion in the market with respect to passing on prices to customers and things like that. In fact, prices went down quite a bit post GST reduction, right? So there was a demand in non-trade segment during that point in time. Also, the fact is, during this Diwali season and extended rains also during this time, laborers have not come back to their respective sites. I'll just, take you back a little bit because there was also elections in Bihar during that time. So laborers went back to their respective states and they came back to the site only after this, election of Bihar. So scarcity of laborers, and hence there was more demand in sites where ready-mix, on-site ready-mix plants were there, and hence more of a, demand in non-trade segment. So that is what the reason is.
So can we confirm that this situation was a temporary thing, and in the current quarter, our share of trade should be back to a fairly decent level?
Yes. Yeah. I think, in the month of December and January only, I think we have gone back even little better than what we have done before. So not an issue. That was a very temporary thing. Extremely temporary.
Got it, sir.
Because, Mr. Srinivasan, you need to understand, we commissioned our plant in the month of September, and also we had to really kind of, test that, capability of plant. We need to ramp up that plant. I think that was also one of our priorities during that time, right?
No, sir. My concern is not about the non-trade volumes growing. My concern is about trade volumes, why it did not grow, but I've got the answer from you. Thank you so much.
We have come back. We have come back very strongly in December and even in January.
Got it, sir. Thank you so much.
Thank you.
Thank you. Ladies and gentlemen, if you wish to ask a question, please press star and one. We take the next question from the line of Sanjeev Singh from Motilal Oswal Financial Services Limited. Please go ahead.
Yeah, thank you for the opportunity, sir. So, can you throw some light on the pricing scenario in your respective markets, be it North, South, North, Gujarat, as well as East region during 3Q? Because realization seems to be down around 10% on a sequential basis. And also, what was the gap between trade and non-trade prices in the markets where you operate?
So, typically, if you look at our footprint, which is there in part of Western market, which is Gujarat, heavy on institutional sales. We go to Mumbai, which is also little heavy on institutional sales. And part of, North, I would say, Rajasthan, Haryana, and west part of UP, right? So, if you really look at, distribution of our sales, then because I told, the earlier questions I was replying to that, post GST reduction, there was some sluggishness in the market, and hence effort was there to really at least, sell some volume from this newly installed, capacity, which was Surat. And also in other market also, there was some sluggishness in demand in trade segment. And that is, kind of, common with the industry. If you really look at, I think that cut across, majority of the players who have reported their, volume, their volume has gone down percentage-wise in trade, in majority of the cases, not all, right? And that has happened with us also. In our case, more predominant because our dependence on Gujarat is much higher than other players. So that is what has, the case has been for us.
So, secondly, sir, how is the pricing scenario as of now in the month of Jan? And plus, if we look at your employee expense, then sequentially that has gone down from 130 crore to around 160 crore. So what has been the reason for that?
So I'll ask, second question first, right? So, as I said before also that we have been, optimizing or improving productivity at our different locations. So first phase we had done last year. Second phase we have started. We had started a couple of months back, 3-4 months back. And in fact, going forward also, I think we do have, plan to improve our productivity. One, of course, through improved volume, and second also, per person, productivity in terms of, cement revenue, per ton cement revenue you get, right? So that effort even is still continuing. So that has benefited us in terms of reduction in employee cost. So one. Second, you asked about pricing scenario. Almost in all markets, post I would say December onward, maybe latter part of December, non-trade prices have gone up everywhere. Trade prices have not gone up that much, but I see since demand has been very good in the month of December, and that is still continuing in January, and February also is a similar situation. I see that prices in trade also will go up from two counts. One, improved demand situation, and second also fuel prices are going up. So that also I think will have to recover from the market. So from these two counts, trade prices also we expect that will go up, and even non-trade also the gap which is still very high in different markets, that will also get shortened going forward. So price wise, I see a good improvement in non-trade segment in the last 1.5 months. In going forward, I see improvement happening in trade as well, along with non-trade. So pricing wise, I think I see things are improving for sure.
So should we assume that employee cost will remain at 115, 120 crore kind of a range going forward?
I think our endeavor is, I told you that,
Ladies and gentlemen, we have lost the line of the management. Please stay connected while I reconnect the management. Thank you. Ladies and gentlemen, we have the management reconnected. Sanjeev, if you could please repeat your question for the management. Thank you.
I was asking about the employee cost. I think he answered it.
So you asked two questions, one on pricing, which I said non-trade has gone up, even trade also expected to go. Second, on employee costs, so we had taken some previous projects. In fact, our endeavor is to further improve the productivity, which we are working on. Yeah. So these are the two things, CGR.
Yeah, thank you, sir.
Yeah.
Thank you. Please press star and 1 to ask a question. We take the next question from the line of Harsh Mittal from Emkay Global Financial Services. Please go ahead.
Good evening, sir. Thank you for the opportunity. So I have few questions. First one being, given that continuing with the previous participant's question, so do you feel that the realization could improve in the similar quantum what we lost in Q3? Coming quarter 4?
Yeah. I think, as I said, the prices are improving and volume also is improving, so we'll get some, leverage as well. So yes, I definitely see that.
And so, what was the clinker sales for this quarter? If you can just bifurcate between cement and clinker sales in quarter 4.
151,000 ton.
And the clinker utilization level?
So we had 90%.
The last question, what is the capex that we have already incurred for the Durg Line 2, and have we ordered the clinker unit for Durg Line 2?
Basically, in Durg Line 2, we have not incurred much of the capex other than what we had mentioned in the last call. So, in the first 9 months of the current financial year, we have incurred about 260 crores we have incurred. Balance will happen in the, we have talked of a figure of about close to 400 in the current financial year on the Durg project. So balance will happen in the current quarter.
So we will be spending 400 crores out of the 3,000 crores planned in this year.
Yeah. Only up to 400 in the current financial year. You're right.
Right. And we are aiming for everything commissioning, including the clinker and grinding unit, by March 27. Am I right?
Yeah. Entire project will get completed by March 28, including all the spread location.
All area.
March 28. Okay. And sure, sir. These were my questions. I'll join back. Thank you.
Yeah. Thank you.
Thank you. Press star and 1 to ask a question. We take the next question from the line of Harshal Mehta from AMSEC. Please go ahead.
Hi, sir. Thank you for the opportunity. 3 questions from my end. Firstly, in terms of the realization, just harping on that. So this quarter, we have seen a very sharp decline of 9% on QOQ basis. So could you please help understand the drivers behind the same? And additionally, if we see over the last few quarters, volatility in terms of realizations and in EBITDA per ton continues to remain much higher versus peers. So any color on the structural or operational factors behind this volatility will be helpful. Also, in terms of price, if you can just throw some number on how our spot prices versus Q3 average for the trade and non-trade segment in our core operating market. That was one. Secondly, on the project updates, so 2 clarifications. Firstly, we earlier understood that it was planned to be commissioned in 2 phases, 2.2 by March 27 and 2.4 by March 28. So does this phasing remain intact? And secondly, on the overall Durg capex, 3,000 crore is the number what we calculated. That still remains. That was the 2 clarification. And lastly, in terms of, you can just share some data on regional mix for this quarter, CC ratio, and the clinker sales in 2Q and 3Q FY25. So that would be helpful.
All right. So I'll answer first part of it on the realization part of it. So I explained that. So drivers were one, non-trade prices went down drastically post GST reduction. One. Second, in our case, because you also mentioned about peers, so our dependence on Gujarat is a little higher, and since non-trade prices went down everywhere, including Gujarat, and our trade sales was also not that great. I think 49%, that is what our trade is, right? So these are the drivers why realization has gone down. This is one. Second, I think you also mentioned about, on this realization quarter-on-quarter basis. So I think one thing we need to understand our footprint. Our footprint, and since I think we are limited to some geographies, like in north we are only in part in north. So north limited to only Rajasthan, Haryana, and West UP. We don't go anywhere. In west we are only limited to Gujarat and part of Mumbai. We don't go anywhere else. In east we are only limited to Chhattisgarh and maybe little bit of neighboring states, right? So our anything kind of happens in this market, either upward or downward, that impacts us, right? And this is little different than other players because they have little spread footprint in different markets. So that gets kind of assimilated and that gets averaged out. But in our case, as I mentioned that let's say take last quarter our sales in west part of India, which is predominantly Gujarat for us, was higher than previous quarter one, and second, non-trade prices went down. So we were impacted much more than what others would have been, right? And if you see the last quarter, if you go back to July to September, right? That during that period, Gujarat did better, and in fact all markets were better, wherever we were present. In our case, I think Chhattisgarh did very well. Rajasthan, Haryana was very good, and Gujarat also kind of performed very well. So I think everything ticked together, and that is why you see a good performance in quarter two and not so great in terms of realization. Though if you really look at the bottom line, whatever the estimation was, I think we are close to that. I think there is no miss on that count, right? But yes, because of the foot presence which we have, in our case, I think that definitely has bearing on us. So this is what on realization. Second, I think pricing, I told you, I see prices are going to do better. One, because of improved demand. Second, also, I think cost is going up. So prices definitely will go up going forward. Non-trade prices have gone up in majority of the market. Even trade also is likely to follow. That is what my estimation is. So this is what you asked. I think your question was quite overloaded. You asked about clinker factor, which I think I'll give you. That is 1.49, 1.44. You asked about capex of 3,000 crores, so that remains. This is what I remember. If anything is missing from my end, just let me know.
Yes, so multiple things. Like first on pricing, if you can just throw any particular number in terms of trade and non-trade, how we are at spot versus Q3 average. That was one thing. Secondly, on project updates, I was just asking 2.2 million ton by March 27 and 2.4 by March 28. That still remains intact. That was just a clarification. And lastly, I was asking on the regional mix, if you can share for this quarter, and clinker sales for the last year, like Q3 FY25 and 2Q FY26. Yeah.
Yeah. So last year it was 7.23 lakhs ton, right? And this year we have already told you last quarter it was 1.51, and for the whole 9 months it's 5.34. On this pricing and all these things, this is not handy with us. We can give it later.
Sure. Thank you and all the best.
Thank you. Thank you so much.
Thank you. Please press star and 1 to ask a question. We take the next question from the line of Amit Murarka from Axis Capital. Please go ahead.
Thanks for the opportunity. So I think a lot of questions have already been asked about your pricing decline, but honestly, I mean, it's still a little confusing still, because while I see that your share of non-trade has dropped by 4 percentage points from 53 to 49, even looks like even the overall portfolio seems to have deteriorated on pricing, including trade. So, but generally in North, I think the trade pricing was pretty steady. So, like is it like your non-trade price decline kind of influences even your trade pricing in the market, even let's say the other category players, let's say the likes of Ultratech and all, essentially does your gap increase between trade also versus the higher price players in the market when non-trade goes down? Because essentially such a sharp decline, I think, was not there in the market essentially in any of the markets. So it's still a bit confusing over there why it has gone down so much.
So, Mr. Murarka, yes, repeat once again. So, trade prices almost were intact. The gap which we were having with the leading players, that remains. That has not widened. I told you two reasons, precisely two reasons, and we do have that detailed, reconciliation also with us. One is, of course, I think Surat we started on 22nd September. And we had to really ramp it up. And Surat expansion, typically this caters to market of Gujarat and Mumbai, which is heavy on non-trade. This is one. So increase volume in non-trade and decrease price in non-trade. I think that has impacted the most. That non-trade is not limited, reduction is not limited to this market. Non-trade prices went down in other markets as well. But the most impact on us was from Gujarat state, right? So this is what, why this has gone down. One. This is what I think you asked, right? Anything else?
Yeah, no. So, I mean, if I simply put, if I think of it that trade was steady, which is, let's say, 50% of your volume, 9% overall realization decline would imply about an 18% fall in non-trade pricing, honestly. So, which I don't think was the case in the market.
If I give you detail the kind of, price drop, and in fact, when I was doing this, road show in Mumbai, during that quarter, I did mention to some of you, I think, I don't know who all are there in the call, that, what kind of price drop we see in non-trade, right? So, non-trade, particularly in Western market, non-trade prices were not that great. And in fact, post GST reduction, since demand was sluggish, non-trade prices went down in other markets also. For instance, let's say we have a grinding station in Cuttack, Orissa. Orissa was not that great, non-trade price-wise, right? Even Chhattisgarh, though I think our non-trade presence is not that much, there also prices went down drastically, gap increase, right? So if you put things together, I am just giving you the major impact which is having on us, right? So I think that has impacted us. That is what I am trying to explain to you.
Okay, sure. Could you also share the non-cement revenue in the quarter?
Sorry?
The non-cement business revenue in the quarter.
Yeah, I'll tell you. So it's 147 crores.
And how much was RMC in that?
RMC was 67 crore.
Okay. And also AAC blocks?
AAC 56 crore.
Got it. And the EBITDA margin would be roughly how much in this?
For 4%.
Sure. And lastly, the capex number for this year, if I understood right, you said 260 has been spent and another 400 will happen. So is what, 650 odd crores capex for FY26 then?
No, it is about around that. You are right. Total capex.
650 odd.
Yeah.
And then next year would be how much?
The next year we are targeting anywhere between 16 to 1700 crores.
Sure. Okay. And then balance will be in 28 then?
You are right.
Okay. Thank you. That's all from my side.
Thank you.
Thank you. Please press star and 1 to ask a question. We take the next question from the line of Rajesh Ravi from HDFC Securities. Please go ahead.
Hi, sir. Good evening. Am I audible?
Yeah, very much. Good evening, Ravi.
Yeah, good evening, sir. Hi, sir. you shared the operating numbers and, just wanted to understand, see, your non-trade mix did increase, quarter on quarter, and you also mentioned that there was a sharper drop in non-trade. Broadly, could you suggest what would be the fall if trade prices would have declined on a like-to-like basis by 2%? How much would have been the drop in your non-trade realizations broadly?
I think that varies, sharper drop.
Broadly, on an average 5%, 10%, just wanted to understand. Because trade, we understand it would have been dropped by, 2 to 3% at max, seeing results of various peers. So just wanted to understand non-trade markets where you operate, what could have been the quantum of correction?
Correction would be about, more than 10%. Exactly, I'll tell you, maybe state wise. Yeah.
Mm-hmm. And could you also share what was the clinker volumes in Q2? You mentioned 1.51 lakhs for Q3. For Q2, What was the number?
I'll just tell you, Ravi. Yes. 1.71.
Okay, so it dropped quarter on quarter.
Yeah.
Okay. And what explains the sharp decline in your input costs on a Q-on-Q basis by almost 150 rupees, given that your fuel cost remains steady at around 1.4, 1.6, and green power mix has also been stable, and then there would not be any, even the clinker production was lower, so, there would be more power consumption and whatsoever. So if I look at the total input costs, raw material, power and fuel and change in stocks, that number has come down by 150 rupees. And secondly, the fall in the freight costs, sharp fall by more than 100 rupees per ton. Is it on account of higher non-trade sales, which is mostly ex-factory?
You are right on point, Ravi. Yeah, because this happens only for plant, and if you look at, our lead has also gone down. So that has helped. Yeah, you are right. Yeah.
And for the input cost reduction, sir?
Input cost, just give me.
Yeah.
So power cost has, Ravi, gone down from 5.52 to 5.37, right? Per unit.
Okay, 5.5 to 5.37. And year on year, how was the number, sir?
Year on year, just give a sec. Yeah,
Sure.
Yeah.
Ladies and gentlemen, we have lost the line of the management. Please stay connected while I reconnect the management. Thank you. Ladies and gentlemen, we have the management line reconnected. Sir, please proceed.
Yeah, hi, sir. You were answering the input cost reduction.
Hello. Yeah, sorry, I think we are struggling with issues in our office today, unfortunately. Extremely sorry for that. We are back now.
Yeah. So you were explaining the input cost reduction on a sequential basis.
Yeah. So 5.5 to 5.37, that is what I told you, right?
Right, sir.
Yeah.
Hello.
Yeah. Go ahead, please.
Yeah. So this is a nominal change, right? On the power cost.
So, if you want, we can give you the details also. We are not handy with that. So,
no issues. And second, sir, if I on the capex project, you mentioned that you have spent 260 crore, and another 400 crore is targeted for Q4. So, given that January is already out, are you, can we assume this 400 crore is on track, or are there chances of any major slippages? And second, given that you are targeting the Durg expansion brownfield over next 12 to 13 months, so what is the status of the execution on that? Has the civil work already started? What is the status on the equipment ordering? And, when would the equipment installation would start? Because, that would require some decent time for that to get executed.
Yeah, we are broadly on track for the capex, which we are talked of in this to spend about 400 crores in the current quarter. And all the equipment, most of the equipment have all been ordered, and construction should start as soon as excavation has started. And once the equipment land there, we start the installation there.
This 12-month target for the clinker is good enough for getting the plant operational by March next year?
Yeah, as of now, it's okay. We'll be monitoring it regularly. We are monitoring it regularly. We'll keep you updated on that.
Great, sir. Just two more questions. One on the railway siding phase 2, what is the status? And second, how is the demand traction so far you are witnessing in the Q4? And January has passed on, and we are hearing non-trade prices across India have improved. What is the status on trade price improvement, and why is that not picking up? Usually, non-trade price firming up leads to a better trade price.
Oh, yeah. As far as the railway siding is concerned, the second phase, that is expected to be completed by March 28. And then the other part.
Demand and pricing, yeah. How is the demand shaping up in Q3? Are we expecting a similar type of growth in Q4 for the company as well as for the industry? Industry also would have grown 7-8% in this Q3.
Yeah, so Q4 being the base little higher, so yeah, I think demand momentum is good. What we see definitely, I think, a double-digit growth in Q4 as well, right? So industry, and of course, I think we'll also grow in line with industry volume-wise. And on pricing, yearly basis, if you look at, I think our estimation is industry would grow by about 7% or so. Q4 is going to be double digit. This is what we see as of today. Pricing-wise, non-trade prices have gone up in almost all markets. Maybe I think some of the market like Odisha and all is still prices have not gone up that much. And in the trade, since demand is good and cost also is going up, prices are likely to go up in trade as well. Now you asked, why trade prices did not go up. Precisely, I think trade prices were almost intact. That did not go down that much. So non-trade prices, which went down drastically in almost all markets, that is resurrecting. And then since demand and cost also is now pushing, so trade prices also will go.
Great, great. So just last question, if I squeeze in, what is the fuel price outlook for Q4, sir, given the surge in petcoke prices? And also for Q1, if there's some indicative number you're looking at?
Petcoke coal prices, yeah, it's going up. I think definitely it will go up because whatever we have stock that we have almost exhausted. Now new buying is also happening. It will go up by at least.
What it is about today?
Yeah. So 1.56 to about 1.60. 1.58 to 1.60. That is what we see in our case.
Okay. Okay. Great. Great. So that's all from my end. Thank you and all the best.
Thank you. Thank you so much, Ravi.
Thank you. Please press star and one to ask a question. We take the next question from the line of Pushkar Jain from Milli Capital. Please go ahead.
Yeah, hi, sir. I just wanted to ask that our non-cement revenue currently operates at like 4% EBITDA margin, which is like significantly lower than the core business. So what is the tipping point volume where operating leverage kicks in for AEC blocks or, to match the double-digit margins of grey cement business or something to that effect?
All these businesses, you have a very good ROCs. But EBITDA margin, I think we are in almost alignment with the industry, right? So that varies, ready-mix, is operates at about 3 to 5% kind of thing. Plaster of Paris business, that is a little on higher side, and AAC block is somewhere in between. Though we are working on improving productivity all across, and our effort is to really focus much more in case of ready-mix on value-added concrete, in case of AC block improving AC footprint. So we are working on that as well. And now we are also in the process of ramping up our Alwar plant, which produces putty and little bit of white cement. So perhaps that will take our margin little better than what we have today. But right now, I think since all these product lines and installations are in the ramping up phase, so we see that improved margin going forward. But not closer to the cement. I would not say that we'll reach to the cement level, but definitely a higher single digit. That is what our effort is.
And aim to reach there by?
It will take at least 2 years time. At least 2 years. Yeah.
That's right. Thanks a lot, sir. Thanks a lot.
Thank you.
Thank you. A final reminder, and no further reminders will be placed to ask questions. Please press star and one to ask a question. We take the next question from the line of Tushar Chaudhary from Prabhudas Lilladher Private Limited. Please go ahead.
Yeah, thanks a lot for the chance. Sir, most of my questions have been answered. Just to add one doubt. We have seen 4 percentage point decline in trade share in this quarter, but our blended share is flattish or constant. What could be the reason for this?
So blended is 62%, I suppose, last quarter.
Yeah.
Right?
Yeah, it is. It has not fallen at all.
Yes, sir. So institutional sales is not only about OPC.
Right.
Institutional sales is also about blended cement. For instance, we have started pushing. Again, I think it has gone up. Are you there? Hello.
Yeah, I'm there, sir.
Yeah. So institutional sales, we are trying to push blended cement, that is PPC. In lot of ready-mix plant, we have supplied now PPC, which was not the case before, right?
Okay,
so non-trade percentage increase necessarily doesn't mean that OPC goes up, because our effort is also to work on the carbon footprint and the carbon net zero roadmap which we have defined for ourselves. So we are working parallelly on that, right? So effort is to really push blended cement in institutional.
Right. And few other this thing I missed your employee cost. Did you say that employee cost will continue to go down further also next few quarters?
No, it will not go down. I think it will get stabilized.
Okay.
Or maybe I think if you look at some of the sites we are adding, right? So Surat we have now added, right? So Surat, I think we need to reinforce team. Then we have some increased footprint in ready-mix business, right? So I think our aim is to really kind of improve productivity rather than employee cost, focusing only on employee.
Right. And lastly on capex, FY26 you said 650 crores, out of which 400 we have planned for 3,000 crore capex, which is ongoing. Am I right? Or I'm okay. Thanks a lot, sir.
Thank you. We take the next question from the line of Kamlesh Bagmar from Lotus Asset Managers. Please go ahead.
Yeah, sir. Just one question. So far, whatever results have come from the sector, we haven't seen this sharp fall in realizations. The 10% quarter-on-quarter fall in realizations, X of non-cement revenues. So how we define that, sir? Because it's a significant fall, 456 rupees quarter-on-quarter, and I'd say same market is there for all other peers as well. So why we have seen such a sharp fall? And over the quarter, there has been, I really don't understand how the communication has been. So far in the last phone call, we were saying that realizations are not going to fall that much, but what we are seeing is a massive fall of 450 rupees quarter-on-quarter realization.
I think I explained you, Mr. Kamlesh. Whatever I had to say, and whatever something exceptional happens. I told you our footprint and wherever we are. I think I do not know which peer group you are comparing with. I'm not too sure. Maybe I think you have something in your mind. But I told you that our presence in some of the market which is heavy on non-trade is high, and that increased in last quarter, and there were reasons also for that. So I explained you that. That is what I think I have to say, nothing more.
No, but now going forward, have we been able to recoup all the fall in the realizations in this quarter? Where do we see our realizations in the current quarter?
Yeah. So as I said, in all these markets, we are in the competitive scenario. We are competing with other players. The way that market moves will move in that alignment only, right? And I told you the pricing scenario also, right? Because for us, I think priority in quarter 3 was to really ramp up the additional capacity which we had, and I think that was the right decision, right call, right? So that is now getting stabilized, and things will come to semblance, for sure. That is what and we have seen that in the last 2 months as well. This is what
but if you can quantify what our current realizations are compared to Q3 average or whatever we have reported in this quarter.
No, right now we cannot quantify because still 2 months are left in this quarter. So let's wait for some time, because there are volatilities in the market. So if I tell you something and tomorrow again you'll ask me a question, then you had mentioned that. So I think that is not fair from my part. So I'll keep you updated. It's only 1 month is over in this quarter. Things are moving in a positive direction, and hopefully I think that direction will not change. This is what my conviction is today. But quantifying things as of today is perhaps I may not be able to.
Okay, great. Thanks a lot.
Thank you.
Thank you. We take the next question from the line of Parth Bhavsar from Investec. Please go ahead.
Yeah, hi, sir. So thank you for the opportunity. So I have 2 questions. One is, what was your fuel cost on consumption basis in Q3?
It was 720,000 kilograms.
So how much was it? I didn't get it.
720. 720.
Sir, on KCAL basis?
Yeah, KKL basis.
Okay, got it.
And
sir,
cost was 1.56. Yeah.
1.56. Okay, got it. And sir, one more thing. Would it be possible for you to quantify the Gujarat sales maybe for the Q3 quarter as well as base year and previous quarter? Is that possible?
I think this is not handy with me. We can talk on this later. Yeah.
Thank you, sir. Those are my questions.
Thank you.
Thank you. We take the next question from the line of Shravan Shah from Dolat Capital. Please go ahead.
Yeah, thanks. Finally got the opportunity. Sir, most of the question answers are again coming on the realization part. Sir, just to get a quantitatively better understanding, since 1st January till now, non-trade prices for us has gone up by how much? 15-20 odd rupees. Is that the fair understanding?
So, Shravan, this varies in different markets, and the range I would put is, 10 to 15 rupees.
Okay. And in terms of trade, you said it remain at the same level.
Yeah. Trade, I think we have been around, 54-55% level. So this is what.
Yeah, but now we are saying that the trade prices to also go up. So
likely
given
to
that,
go up, Shravan, likely to go up.
Yeah, likely to go up. Yeah. But given that, sir, some of more capacity is still to come up, and everybody will try to push the volumes for the March. So don't even we are considering that there will be some rollback in the month of March.
So that is what I was trying to make understand earlier, the gentleman, Mr. Kamlesh, that, whatever we say based on what we see today. I think there is a lot of volatility and dynamism in the market, and, based on that, we'll have to take our business call, which we keep on taking. So definitive, forecasting sitting today, I think it becomes very difficult. I agree with you.
Yeah, understood. Because the issue for us, why everybody is trying to harp on the same thing, is because to make the number or the estimates as an analyst, this kind of a deviation at a 200, 300, 400 rupees makes our entire estimates goes on for a toss. So will be difficult. So it become a from buy to it can become a sell, and from sell to it can become a buy. So that's why everybody is trying to understand why such a significant volatility in the prices for us. So that's the only thing. So just more clarification in terms of total capex in 9 months at console level is how much, sir? Is it 260 because 250 crore was there in 1H?
Yeah. Just hold on, Shravanji.
Yeah.
On a console basis, including the various projects which we are doing, in 9 months is about 350. 260 we are talking of only for the Durg expansion.
Okay, 350. So, and more another we will be doing a kind of 400 crore on Durg, and maybe if you can specify in terms of on a yearly basis, the maintenance capex would be how much? 200 odd crore for us?
No, maintenance ours is not 200. It's totally 50 crores in a year.
Okay. So for FY26 would be then 350 plus, so 750 to 800 crore would be the total capex at console level for FY26.
That's why initially, it could be ending up maybe anywhere between 6. We will not touch 800, then 650 to 700 at that.
Okay. Understood. And then, sir, on the conveyor belt, is there any update, or it is the same what we said last quarter?
Yeah, same status. So still in the final stages. Same status.
And then in terms of the further expansion beyond this, the Nagaur, Kutch, and Assam. So whatever we say to reach a 30 million tons, so that stand remains same. And in terms of the net debt to EBITDA, that 3.5 times that we will try to maintain.
Yeah, we would like to not cross that limit.
Okay. And sir, in terms of the cost reduction, so from here on, from Q through, would be a difficult even for on the cost basis also, because when you said the staff cost, so there also want to understand more. Was there from Q2 to Q3, the number of employees, has there a decent decline, or was there a salary cut?
So no salary cut, productivity improvement, and that is what we'll keep doing even going forward. So we don't do salary cut.
Thank you. We take the next question from the line of Harshal Mittal from Emkay Global Financial Services. Please go ahead.
Yeah, so thank you for the follow-up question. Just one question. So we are already working at more than 90% clinker utilization, and our Durg line 2, as mentioned earlier in the call, will not be coming before March of 2027. So what can be a safe assumption for the volume growth for FY27?
So FY27, we have some headroom in Surat. One, we have some headroom in Udaipur. Second, we do have some headroom in even Jhajjar, Jharli. And fourth, we have some headroom in Cuttack. So I think this is what we see that this will, keep us on the growth path, right? So even next year also, I think we see a similar kind of growth, of course, contingent to the industry growth, right? But we similar kind of growth even next year.
But sir, our clinker, so are we sourcing clinker from outside, something like that? Because we are already working.
No.
Okay. Thank you.
Thank you. Ladies and gentlemen, due to time constraint, we take the last two questioners in the queue. We take the next question from the line of Rajesh Ravi from HDFC Securities. Please go ahead.
Yeah, hi sir. Just wanted to confirm the depreciation impact in this quarter increase. Is it totally on account of Surat? Grinding expenses?
Yeah, basically you're right. Surat got commissioned in the last week of September. So interest and depreciation increase is the capital-related cost increase on account of Surat.
This is totally for 1 quarter impact in depreciation, because from 78 crore it has gone to 85 crore. There is a sizable 7-8 crore. If which we analyze it, then it becomes 36 crore, and while the project cost for this expansion was, if I recollect, it was less than 300 crore. It is 1 quarter impact in December quarter.
There is some, I was told that about 6 crores is on account of the Surat, and some normal capex has happened, and third is on account of the leasehold land depreciation also being charged.
Understood, sir. And sir, could you give what was the clinker production for FY25 consolidated basis? Clinker sales, sorry, not production, my bad. Clinker sales, total full year.
7.23 lakhs ton.
Okay, 7.2. This was for the full year, okay. Because if I see you told your CC ratio is at 1.44. So are you looking to increase the CC ratio in FY27? It was earlier in FY21, 22, 23, you operated at 1.54 and more than that. Now it has come down to 1.44. So what is the safe assumption for next year?
I think our effort is to take this blended cement from 62 to about 57%. To that extent, our CC ratio will improve.
Understood.
Right? Understood.
Yeah, that's all from my end, sir. Thank you. All the best.
Thank you. Thank you so much.
Thank you. We take the next question from the line of Amit Murarka from Axis Capital. Please go ahead.
Yeah, hi. Thanks for the follow-up opportunity. Just wanted to clarify on those CapEx. I see that your November corporate presentation mentions the CapEx number as 3,300 crore. So can you just clarify, is it 3,000 crores or 3,300 crores?
Yeah, we had included some expenditure on the conveyor belt also therein, but otherwise it is 3,000 crores only.
So the conveyor belt is added to that, but that's already going on,
Yeah.
right? I mean, what you mentioned.
No, we that is not going on. That is stalled because of this issue of the land, as we have been talking of. So that includes the expenditure already incurred plus the balance to be incurred, which is about 170 odd crores.
Okay. So if there's no progress on the conveyor belt, then it is 3,000 crores then.
Yeah.
Okay, sure. Thank you. That's all I wanted to clarify.
Thank you.
Thank you. Ladies and gentlemen, with that, we conclude the question and answer session. I now hand the conference over to Mr. Vaibhav Agarwal for his closing comments.
Yeah, thank you, Ryan. On behalf of Phillip Capital India Private Limited, we would like to thank the manager of Lakshmi for the call, and also many thanks to the participants joining the call. Thank you very much, sir. Ryan, you may now conclude the call. Thank you.
Thank you so much. Thank you.
Thank you. On behalf of Phillip Capital India Private Limited, that concludes this conference call. Thank you for joining us, and you may now disconnect your lines.